Ever woken up to find your money working harder than you? That's the dream, right? And apps like SoFi promise to make that dream a reality. But does it actually do the investing for you? Let's dive in. Now, before we get into the nitty-gritty, let's clarify something. SoFi isn't a traditional investment firm. It's a financial technology company, often referred to as a fintech. This means it uses technology to offer various financial services, including investing. So, while it might not be your grandpa's broker, it's definitely trying to shake things up. The core question is, does SoFi handle the entire investment process for you? The short answer is, kind of. Let's break it down. First off, SoFi offers what's known as automated investing. This is like having a robot financial advisor. You set some basic goals, like retirement, buying a house, or building an emergency fund, and SoFi suggests a portfolio based on your risk tolerance. It's like picking from a menu, but the menu is curated by algorithms. Once you've chosen your menu item or investment plan, SoFi does the heavy lifting of picking the actual stocks, bonds, or ETFs that go into your portfolio. This is where the automation comes in. You don't have to sit there and pore over financial reports. The software does it for you. But here's the thing, while SoFi selects the investments, it doesn't make trading decisions on a day-to-day basis. It's not actively buying and selling based on market fluctuations. Instead, it sticks to the original investment plan you chose. This is called passive investing. Passive investing is like setting a cruise control for your money. It's not trying to beat the market, it's aiming to match it over time. This approach can be pretty effective, especially for long-term goals. So, to recap, SoFi automates the investment selection process, but not the trading process. You are essentially handing over the reins of picking what to invest in, but you're still the driver when it comes to deciding when to buy or sell. Now, let's talk about something important, diversification. SoFi is big on this. It spreads your money across different assets to reduce risk. This is a key principle of investing. So, even if one part of your portfolio takes a hit, others might be doing well, cushioning the blow. But remember, diversification is just one piece of the puzzle. You still need to consider your overall financial picture. How much risk are you comfortable with? What's your time horizon? These are questions you should think about before diving into any investment, including one through SoFi. Another thing to keep in mind is fees. Like any financial service, SoFi charges fees. These can eat into your returns over time. So, it's crucial to understand what you're paying for. Okay, so we've covered the basics of how SoFi handles your investments. But does this mean you can completely set it and forget it? Not exactly. While automation is a huge plus, it's still essential to keep an eye on your investments. Markets fluctuate, your financial goals might change, and SoFi's offerings can evolve. Regularly checking in on your portfolio is a good habit to develop. You don't need to obsess over daily market movements, but taking a look every few months can help ensure you're still on track. So, does SoFi automatically invest for you? In a way, yes. It handles the investment selection process, but it doesn't make active trading decisions. You still play a crucial role in setting your goals, understanding your risk tolerance, and monitoring your investments. Automation is a powerful tool, but it's not a magic wand. Financial success requires a combination of technology, knowledge, and discipline. SoFi can be a helpful partner on this journey, but it's ultimately up to you to make informed decisions about your money. With that said, thanks for watching, and until next time.